Welcome to this week's video. In this week's video, I'm going to talk about cash basis of accounting versus accrual basis of accounting. And which one is better? Well, like a lot of things in accounting, it depends. And it depends based on the transactions and timing that goes on in your business. The reality is that transactions that occur in your business occur at different times. So what I mean by that is that in some cases, the timing of when the cash occurs, goes in and out of your business, is different than the actual transaction itself. So in this case, for example, you may receive materials, but you don't pay for them later. You may work on that product, but you don't pay for the labor until later. And you ship the product, but you may not actually receive the money for that payment. So in a cash basis and accrual basis, you're going to treat those transactions a little bit differently. So let's start with cash basis of accounting. Cash basis records the expenses and records the revenue when those transactions are occurred. So expenses is when it's paid. That's when you would reflect them in your financials. And the revenue is when you deposit it. It's mainly utilized for the tax basis of accounting, but businesses will use that as well. So what are the problems then with cash basis of accounting? Well, often the timing of when those transactions get recorded are not going to be the same. And why is that important? It's important because it may not then in your financials reflect the actual economics of what's going on, and it's going to distort your numbers. And I'll give you an example of that shortly. Also, the cash basis, really at the end of the day, it's kind of like your checkbook. It just shows you the ins and out of the cash and how much do you have more cash that came in versus cash that went out. So on the accrual basis of accounting, on the other hand, we're going to reflect transactions in your financial statements when they actually occur, when you actually receive the materials or goods for your production, when you actually ship that product and you're entitled to being paid for what you have shipped or the services that you've provided. It allows, and I'll show you an example for a more accurate profit and loss statement. And it's usually, if you're looking to do financing, it's usually going to be required as well. So what are the problems with accrual basis of accounting? Well, the first one is it's a little bit more complex than the cash basis of accounting. It takes a little bit more work, but it's not a lot of work. And once you get down the process and the systems, it actually becomes easier. But it does take a little bit more work. But it also will require further analysis of cash, because now when you're on the accrual basis, you're not recording cash in and cash out in your profit and loss statement when those transactions occur. You're recording them actually when you've incurred the expense or the obligation that you have to pay, and when you've are entitled to the funds from the products or services that you've sold. So it can be more complex, but a careful analysis of the cost benefit of using cash versus accrual should be looked at. And what I mean by that is in some cases you may be utilizing the accrual basis of accounting. Let's say that you're an auto repair shop and you buy parts in advance and you then later have to pay for them. Well, it depends on the timing of all those transactions. If you look at the cash basis versus accrual basis and what those numbers would be, maybe the differences are not that significant, such that the cash basis may be okay and you don't necessarily need to spend a lot more time and complexity of accounting. But that analysis really needs to be done in order to make sure that you understand that. So let's talk about an example. I showed this to you earlier. In this case, you have on the top, you have cash when the cash is actually going out, and the bottom is the timing or the incurring of the events. So in this case, you receive materials in April and you pay for them in April, but the actual work isn't done until May, and the product is shipped in May, but then you don't get paid till June. Now this is kind of an extreme example, I'll admit, but I'm trying to kind of show you what that would look like in your financials, so to kind of get you to understand, okay, it really is a timing basis, and these are the things that I need to think about in my own set of financial statements. So in the cash basis example I gave you, the materials would be received and paid for in April, and that's when it would go to your financials. Likewise with the labor, that would go into your May financials, and then in June you would receive payment, and you would deposit the funds and record that as income. So you can see that my numbers now, April, May, and June, look all confusing. June is a great month, but I'm losing money in April and May, and that's not actually what is happening. In the accrual example, you receive the materials or the parts or whatever that may be in April, and you actually record that as inventory because I haven't actually shipped that or sold that. I haven't done all that until May, and in May you then recognize those materials as an expense. You recognize your labor, and then also you recognize the revenue because you shipped it before you in the month of May, and you're entitled to those funds. Legally, you're entitled to those funds because you delivered what you had promised to deliver. So you can see that your May financials are a little bit more accurate. Now, on the case of labor, and this isn't a very simple example, but in case of labor, you may have cases where you want to accrue for labor. And what I mean by that is, let's say that your 2-week pay period, 1 week is in May, 1 week is in June, and so you don't pay until June, but you have some labor that you incurred in May. In that case, you would want to record or accrue some of those wages in May, and then the rest would then fall into June. So again, it comes down to doing an analysis of the two and seeing which one is better. And also, the other question is that, well, if I follow the accrual basis of accounting, now I'm not sure where I'm at on cash, and that's where the cash flow statement will help you. And it's actually a better statement than relying on your P&L for how cash is, how you're doing in cash. And that'll be a subject of a later video, but keep that in mind, that cash flow would be something that you'd want to utilize when you're utilizing an accrual basis. And actually you'd want to use it on a cash basis too, but I won't get into those more details, but you may want to as well. So just keep that in mind. So in summary, utilizing the cash basis or accrual basis, really you need to look at and decide based on the needs of your business. Decide on where, how that would impact. Do a study of how that would impact. You may use accrual for some of it and cash for others, or you may adopt an accrual basis of accounting, just depending on the cost benefits. But it's important to look at both. The goal, right? The goal overall, to take a step back, is not trying to get the right basis of accounting and all that kind of mumbo jumbo. It's more of, I need as a business owner, you need as a business owner, better view in the profitability of your business, and deciding on the cash basis or the accrual basis may just give you those answers that you as a business owner need. And constantly review this process. If you're using one system or the other, constantly review if that makes sense, and then also how you can improve those processes to make it actually simpler for you and give you the data that you need. So that's all I got for you this week. If you like this video, hit that thumbs up. I'd really appreciate it. And also if you subscribed, and I will catch you on the next one. Thanks.